Hello and welcome to the Immaterial Podcast, where we explore the front page and the footnotes to discuss accounting, the law, white-collar crime, and everything in between. I'm your host, Chris Ekimoff, and today we're back with a Record of Consultation episode, sharing the experience, background, and perspective of an esteemed practitioner in the enforcement, accounting, or legal space. Now, longtime listeners of the Immaterial Podcast will know that for our topic today, we're kind of missing a key piece to discuss here. When it comes to insider trading, there's actually no listed federal statute that defines insider trading, what it is, who should do it, who shouldn't do it, any of those ideas. If you're looking for more detail on that, you can actually go to our previous podcast effort, the Insecurities Podcast. We had 3 separate episodes discussing that topic, and I think Kurt and I still did not get to the bottom of an answer for insider trading. We'll have a link to those episodes in the show notes. But the thing that the government has put hundreds of people in prison for has never actually been written down by Congress as a single, as we discussed, clean rule. So how does anyone, say a lawyer, a CEO, or maybe even a hairstylist in the Simi Valley in California, actually know where that insider trading line is? My guest today spent 20 years drawing that line for the government. She now defends people standing on the other side of it. I'm joined by Amy Stahl Cotter of Hyman Cotter PC, where her practice focuses on the investment community, audit firms, and securities industry participants across their regulatory, investigative, and litigation issues. Amy, definitely a short bio. We'll get into it a lot more detail, but welcome to the Immaterial Podcast.
Thank you so much. I'm really honored to be here with you.
You got it. So, let's jump right into your background, your career. This is a topic area of insider trading that you focused on, but probably not the only thing you touched when you were at the commission. You served in Chicago's enforcement division. You were a senior trial counsel, as well as spending time in the asset management unit. So if you could, just give us a brief rundown of each of those roles, kind of some of the cases that maybe landed on your desk during that time.
Sure. So when I left the SEC in 2025, I was an assistant director. So I was working with a group of attorneys and accountants doing all kinds of cases, fraud in public companies, financial statement reporting, audit firm fraud, insider trading, really anything you can talk about in the securities industry, I've had the chance to work on, which is part of the great honor of being a former SEC person is you get that experience. As a trial attorney, I think the most fun I had was working on insider trading cases, including being an special assistant. They call them salsas, makes it sound really fun.
But get those acronyms in, right?
Right, exactly. Kind of like salsa, right? I was a special assistant U.S. attorney on an insider trading case out of Ohio, and that was well known there with Roger Blackwell, who's was a big marketing professor for the Ohio State University before he got busted. And so I've just really had the chance to run the gamut, which now I'm bringing, hopefully, to clients in the private space.
You got it. One of the things I love talking about with former enforcement professionals or active enforcement professionals is kind of what makes a case worth bringing. Some of the constant criticism you hear about the DOJ or the SEC is you read about the conduct of a person, whether it be a clear violation or something on the fringes, and then you get to the dollar amount of ill-gotten gains or the amount of money embezzled, and it's like $3,200. And we go, what are we doing here, right? So talk to me a little bit about how does the commission decide what cases are worth bringing, and what are some of the factors that help make that decision?
Sure. So you got to think about the fact that they have limited resources. So each case is a message case in some way or another. Insider trading cases, especially, the dollar amounts are typically not very large. If you have a scheme with many participants, like we're going to talk about, the numbers can rack up there. But I would say each chair has their area of focus, so that's one of the factors. Another factor is, are the folks involved gatekeepers or important industry participants? So is the commission showing that they're watching the people who are holding everybody's money, right, are the key participants? Because, theory, the fidelity of the markets is based on the good honor of all the participants, right? And then sometimes it would be, you know, especially in a fraud case, even if it was a close call, is this someone who is high risk? So, for example, we had a case where the person was a lawyer, a former star in football program in a very football forward state, who was refusing to accept that his conduct was fraudulent. That person is a very high risk, doing private offerings for the future because of their standing. They're a lawyer. They have a great, everybody knows who they are. And if that person isn't willing to come to the table and negotiate a settlement or talk about how they've learned from their lesson, then that's an important case to bring, even if the dollar amounts aren't very high, because you are sending a message that this person is someone who needs to be tagged in some way to protect investors in the future.
Yeah, you can't predict what might happen, in the future, but seeing the position, the credential, the reputation, maybe that's another factor to think about whether or not something needs to be written down on paper about this issue, so that that's seen in the future.
Exactly. I would say there's always some plus factor, and that can be different for different kinds of cases, but they're not willy-nilly decisions, right? I love hearing people talk about the staff and, regulation by enforcement. Yeah. And I'm like, it's not like people were running around the office like shooting off guns. Like everybody, like people, there's such a layered decision making, and it's always been that way. So, people may disagree with the decisions that are made, but it is not the staff who is, making those final determinations. It's just their skill that gets to the recommendation phase. So. Yeah,
I'm just imagining that cartoon cowboy from the Bugs Bunny
right.
series, just wandering around in his chaps, firing off the gun. So, I mean, you've talked about a couple of the key things that the commission thinks about, and you mentioned before, Amy, you're on the other side now, right? Mm-hmm. So, are you advising clients just to not be in a position of recidivism, or to not be a message? How does that that experience play for you? That maybe another defense counsel who hasn't practiced at the commission, wouldn't be able to answer for their client.
Right. Well, I think where I would advise people that where my experiences of benefit is, if you're a clear-cut case, right, and your conduct is done, it's too late for me to help you, except to try and get you out of that scenario the best way I can. Mm-hmm. But for broker-dealers, registered advisors, people working in those spaces, compliance folks, I can bring the information to bear about how is the SEC going to look at you, and show you how important the SEC thinks you are, even if you think you are just a cog in the wheel. Yeah. In those registered entities, you're held to the highest standard, and so I can bring that mindset. I may not agree with where the staff is holding you at the current time, but I can bring that mindset and advise you either how to avoid a problem in the future, or how to argue that the way the SEC is looking at it is wrong.
Right. It's less of kind of that classic Washington revolving door idea, and more about the frame, like what frame of mind, what frame of reference is the commission using, and how do we accurately represent you within that frame? We don't fall in a bucket we shouldn't. We, obviously in good faith are trying to figure out the best way out of this issue. That sounds like a great way to think about it. And not only, Amy, do you have that experience, you also, I'd like to say, are an award-winning SEC participant. In 2001, you were given the Ellen B. Ross Award for exemplary performance. Is that tied to a specific case or matter, or just being a heck of an employee refilling the coffee in the break room?
I wish it was that easy. No, it was actually tied to. That is a big honor. That's why I put it on.
But congrats.
Yeah. No. Yeah. Miss Ross, it was held in incredibly high esteem for the staff, and so that's why the award is named after her. But I did receive that award after bringing, not alone, with many other people, a Ponzi scheme case that at the time, this was in 1998, was $300 million, involved the Cayman Islands, Dominica. At that point was one of the biggest Ponzi schemes ever. Now it seems like chump change, right, compared to what's going on. But and I will toot my own horn that the reason that case eventually got brought was I was a new attorney at the SEC, just out of law school, and I was given one paragraph that was like an internet posting that looked like just a cheesy offering fraud, and we built that from one guy and one posting into a 300 case against multiple defendants around the country. The DOJ, the Southern District of New York, charged the main bad actor. They got to, seize him at the airport. It was all very exciting. Amazing. It was early in my career, but it was fun. Great. So, so that's why I got it.
For you. There you go. So, I mean, for those folks listening out there, right, if you've got something on the internet, Amy's going to find it to make sure that you're in good order. But it's great to hear your background, Amy, and really kind of tease up what we want to talk about today. There was a pretty large development in the insider trading world, and I say large both in number as well as in significance. In May of this year, 2026, charges were brought against 20 defendants by the commission with a parallel DOJ criminal case in Boston, bringing that total to about 30 people charged in this matter. 15 of them actually have already pleaded not guilty as of June of this year, and that's the Nourafchan case. So first off, before we get into the details here, we're going to decide, you and me together, how to accurately pronounce this individual's last name.
Oh, I'm begging off that one. That's your job.
You're the host. Nourafchan, and we apologize to all the greater Nourafchans out there for us pronouncing it inappropriately. But kind of the crux of the matter, I'll do a brief overview here, and then we can get into the details, Amy. There's a gentleman, Nicola Nourafchan, who is a mergers and acquisitions attorney at a few prominent global law firms, and through that work had access to a lot of deal discussions, potential activity, kind of those classic indices in the market that having knowledge ahead of time will move stock prices, right, for publicly traded companies. Allows for some thought to be put into whether or not this is a good deal or not a good deal. Will it go through? Will it not go through? Right? All of those kind of ideas baked into that M&A role at firms that I'm sure all of our listeners either work at or know of. And have an M&A department, I'm sure, at a lot of those firms. And this is kind of classic to a certain degree in that you've got an individual with ideas or with knowledge of how these potential M&A deals may progress, and then sharing that knowledge with someone else. I think what's interesting here is kind of I like to call it the telephone tree. Amy, you and I are of an age where you remember when something happened, at school in the 80s or 90s, all the parents had to call each other right on the telephone tree. Yeah. Here we had something similar with what we'll call the tipping tree, which started with Nikolai Nourafchan, who started informing friends of his as well as his own brother. I believe his brother started talking to his hairstylist, which is why we made that reference earlier about the Simi Valley in California. Mm-hmm. And then kind of this straw man approach to the utilization of this information. So I'll stop there. You obviously have a much better background in these areas. Where did you see the Nourafchan case being so interesting? What kind of evidence and what do you think the spine of this case really relies on?
So, I mean, I see the spine of the case as the proof of the deceptive acts that they engaged in, the code wording, right? So when we talk about, what makes a case worthy, well, obviously this is a large scheme. And I would say there are twigs, right? Tipping twigs instead of, right?
Maybe not a fully formed, plant organism.
Exactly.
But a lot of different branches, yeah.
Like the hairstylist and the downflow there.
Right.
But it is classic. I'm not sure if we know yet, and you might know this, who the flipper is, right? There's going to be a flipper in here, and or a pissed off girlfriend,
yep,
pissed off wife, pissed off romantic partner. But the coding is the hallmark for me because that's what indicates intent to deceive, right? And so, and it also is the thing that juries love, right? So there's a case, I don't remember the name right now, but out of New York where the guy was eating napkins in Grand Central Station.
Right.
It's CSI, Law and Order, to reference old shows, but juries love that stuff, and so that's why the government throws it in. I mean, I do think the challenge is the extent of the chains, right, or twigs, but I am expecting, if it goes to trial against any of these folks, that they will have, it's not just going to be one end of the twig to the other, where they have the flips. They're going to be flipping people along the way, even post-charging, right? So, because they don't do it, they don't charge people to this scale if they don't have the proof. Now, you can disagree with whether they should charge them, but they think they've got the proof, right, on all these folks. Enough circumstantial proof to flip them, at least some of them, and that's all they need.
Yeah, and so just to be crystal clear, when you say coding, we're not talking about some detailed mathematical, connection of this stock is actually 1, 2, 3, 4, 5, 6, and it's not coded like in kind of the Da Vinci Code style. It's much more of the parlance of conversation they were having, right? In the terms that they were using to not say, "Hi, Amy, I know about a stock merger that's happening. You should go buy out of the money call options tomorrow because it's going to close on Friday," right? That sentence in an email or a text message probably ain't great from a defense perspective. So when we say coding, we mean something a little different, right?
Exactly. That's exactly what I mean. I mean, the language they're using is what is the code, the secret code.
Yeah, and so they had talked about like the pieces of information, the tips were flights, like airline flights to different places. And I think even at one point they were referencing a religious professional, a rabbi, was scheduled to have surgery, and that meant that a merger was happening or was not happening, right? So to your point about proving intent, people would not be talking in this somewhat befuddled but clearly meaningful conversation with each other unless there was some intent to make sure that if that text message was ever read on an open laptop screen or printed out somewhere, it would be like, okay, what do they care about flights so much about, right? Versus trading info. Right,
and you're looking at the quick responses, right? They can, they'll have the seconds in between the text and the response, so the other person clearly knows what is meant in the language that is used in the particular text. And then it's frankly pretty easy to make sure that rabbi was not scheduled for surgery that day.
Right, yeah.
Or that, the person didn't jump on any flights in the 3-month period. I mean, that would be, if you're a prosecutor, that's like so easy to prove. It's, if they were more creative, perhaps they did jump on some flights, but probably not, right?
It's kind of the double-edged sword of any of that coded language. And I remember a case I worked on, 20 years ago, back when, email review and doc review was such a manual task. And halfway through the investigation, we had identified that when the alleged bad actors were talking about, paying bribes, they were talking about buying chickens. This was in a pharmaceutical industry, right? So chickens is not a word that usually shows up. And so all we did was start keyword searching for chickens, and boom, we had all the hot docs figured out. But it took the interviews, it took cracking the code, right, to get to that point. So there's interesting, like I said, a double-edged sword of if you don't know what the code is, who knows why you're buying and selling so many chickens. But yeah, so a couple other things we always talk about with insider trading cases is kind of those thresholds on which the case leans, right? Coding, obviously, from an intent perspective. The O'Hagan case always talks about misappropriation of information or kind of that duty theory for that. I don't know, Amy, if you've got thoughts on how that applies to the tipping twigs or the tipping tree downstream here.
Well, I mean, we could spend all day probably talking about the case law, but you really just have to show that the person who is the tippee, intends to help the person who's getting the information or get some benefit. So the motivations on the twigs can be different, right, for the different tippees, and so that might make it more challenging in a case of this size with this many defendants. But they don't have to have the same motivation, right?
And maybe this is my unfair summarization of insider trading law broadly, but Amy, please tear it apart if it's not there. If I'm an M&A attorney working on a deal for client A and client B, and I know something's going to happen that's going to impact their stock price, and I tell someone to trade in client A or client B, I clearly have a duty in my job as an M&A attorney to contain that information to the relevant parties before it's made public. I violated that duty and instructed someone, in an advantageous way that they could go and do that. I contrast that with I'm walking down a street in Manhattan past an apartment building, and I see a loose piece of paper from the garbage dumpster in the back that references a potential merger with client A and client B. And I, Chris, decide on my own as a janitor, as a school teacher, as a person in New York to buy or sell A and B. That's not inside trading, right? That
No.
piece of paper is free and loose in New York. Again, I'm not encouraging everyone to go dumpster diving in M&A attorneys' apartments, but there's no duty of protection there of information for me, and I'm not being provided that information with the intent to enrich myself or do something along those. So those are always like my two, kind of stakes in the ground, and then there's a million gray-colored stakes in between those two, but that's kind of where I stand.
Right, and I think you're absolutely right. And what the case law says is that, if in theory, right, this is not what the case law says. The way I quantify it for myself is if anyone else could do the same thing and find out that information, then it's not insider trading. And a lot of these folks who are the gatekeepers or who have the duties. Again, they're signing agreements. They're sophisticated participants. Yep. They know, they're not.
I couldn't do that isn't a great defense when you're at a prestigious law firm doing M&A for a living.
Yeah, I've got your employment agreement right here, buddy. It says,
Section 38, Clause A-2. You shouldn't have done that.
Yeah, exactly.
So I think this case, right, it's interesting because of the volume of folks involved, but from a activity perspective, right there, it really kind of follows a vein. We were just discussing before we recorded a couple of cases this week that came out. One that's gotten a little bit of news attention around an individual who was accessing his romantic partner's laptop while she was out of the apartment, or he was even, I guess, had asked her. He's interested in building he's alleged to have asked her. He's interested in building databases of information and wanted to see what access her public, I think it was a public relations firm, how they organized their databases, and she gave him the passwords, and he was able to do that. So again,
never do that. That's my advice.
I tell our interns every summer when I walk by, lock your computer. I don't care where you are, just lock your computer. Just lock it. But I think that leans into kind of the next topic we want to talk about, and that's really where we are in today's SEC enforcement world, right? We're here in the middle of 2026. Chair Atkins and the Director of Enforcement, have had some time to push forward the agenda over the past year. We've talked a bit about in 24 and 25, the clip at which a lot of cases were brought were pretty significant, especially in early 25, and then seeing a real change there in later in 25 and through earlier this year. We can link to some of the enforcement stats that have been put out for the fiscal year ending September 30, 25, as well as year to date here in 26. But I think generally speaking, right, the commission has come out and said, we're not going to be pushing the creative fringes of case law and patterns of potential issues, especially in insider trading. Amy, we always like to talk about our shadow trading case with the Panawat matter.
Right.
We can obviously spend 7 episodes talking about that. But they always chat about returning to this quote-unquote bread and butter idea. So first, just to get your take, where do you see the Nourafchan case falling? Is that bread and butter? Is that more kind of that fringe side? And then how do you think the commission is viewing this activity broadly in 2026 today versus maybe with the 2 decades you spent?
So I see the Nourafchan case as bread and butter, right? The scope of it is what's notable. But we've been bringing I'm not at the SEC anymore. I was showing Chris, I have my enforcement hat.
That's right. She's still repping the merch here.
So I can still put it on. No, but the SEC has been bringing those kinds of cases forever. And we did an insider trading case with a former KPMG mergers and acquisitions tax attorney, where he was taking advantage of that info. So I definitely see insider trading, and I know that they've highlighted that as one of their priorities. I think because it is so core, and it's been around forever. I think they're focusing on industry participants, right? They want to focus on the people who have opted in, is the way I would think of it, to regulation, to investment advisors, folks at broker dealers who, again, are at the center of our markets and the most important, and who know that they're being watched by the SEC and have no real argument that they shouldn't be. And I would say, as far as the frequency of cases, I mean, others have spoken on this already, but I had the privilege of going through many different administration changes of both parties, and there's always some lag just from an administrative standpoint. The chair has to come in, their staff has to be appointed. It's a battleship that turns slowly, not quickly. I think the scale of it does reflect how many cases were brought before Atkins came in. Maybe in anticipation, no one will admit this, right, that of what would happen to them after. But I expect with Mr. Woodcock in that seat now, who is a tried and true battle veteran of the SEC, that the pace will pick up. I also think the recent decision on disgorgement out of the Supreme Court, to the extent that uncertainty slows cases down as well internally. So to the extent that caused any lags, that's gone now. Not to say there won't be future fights, but it gives them a clear guidance of where they can be now. So I don't think it's that different. I also thought, I don't know if you've seen this, it's interesting the reporting that's been done about, even with the insider trading cases, though, over the last couple decades, the percentage of those has gone even way down.
Right.
So maybe that will change now after the next couple of years, but we'll see.
Well, I guess, Amy, that begs one of my favorite questions of all time in the world that we live in. Why is insider trading illegal, and should it be? First off, I want to give you a chance to respond to that, and then we could talk about some of the economic and market arguments that sit on both sides. But they're up your sleeve.
Okay.
The SEC
I have to put on my enforcement hat for this one. So I definitely am in the corner of mom and pop investors, though, and I think if you were to say to your grandparents, like, should someone be able to do something that you can't do and make money off of it in the financial markets, most people would say no. And for folks whose pension funds and retirement funds are sitting in the markets, right, they rely on just the stability of the markets in general. And so I see it more as a global question, not a particular behavioral question, right, in the law. It's, do we want our markets to stay strong? Do we want people to keep to feel secure? And so whether or not you think a particular case meets the definition of insider trading, right, again, without a statute, whether, it's not a victimless crime because people are using informational advantage to game the system. You may not be able to identify the shareholder who bought your shares, right? So, from that perspective, but I think the insider trading cases that are brought, and frankly, it's not usually low-level folks. It's Martha Stewart's, the Martomas, SAC Capital, right? And it's important for the large swath of the American public whose funds are in the system to feel like even the important people are held accountable. Now, is the SEC catching everybody? No way. again, that goes to the message of the cases, though. It needs to be a shot across the bow to make people at least concerned that they might get caught.
I'm gonna go online after this, Amy, and find a bunch of headwear so I can mimic your word. I'm gonna put on my cynic hat right now and say, Amy, anyone who attempts, any mom and pop, there you go. Now you're a little bit more edgy with the enforcement side. The belief that a mom and pop investor can make money in the market today, and again, my cynic hat on, I think is a limiting idea, right? That I can go up against, if you will, if you believe the market's a zero-sum game, these professional traders, these hedge fund managers, these artificially intelligent, foundational systems that spend millions of dollars to eke out, the 2 or 3 penny spreads between stocks in different industries, or the international investments of, there's the famous, was it the Indian stock trading futures market in which the derivatives were worth so much more than the actual underlying stock. There's all these listen, my grandmother was born in a house with without indoor plumbing and no telephone, and lived into the world of cell phones. If I called her and said, "Hey, Nan, do you think the stock market should do something?" she would laugh and go back to her life, right? So I think for me, right, one of the things that really opened my eyes was, yes, I believe that if I participate in the market with a good faith attitude in an attempt to identify another stock that I think will be valuable in the future and invest in it long term, I hope that belief is true. But I've seen enough, and I'm sure you have as well, that adds that cynic side to it. So in terms of chasing down individuals in a market that is so filled with people who are pushing the boundaries of what it means to be immediately outside the insider line, right? You've got surveillance companies that will go look at how many cars are parked in the corporate headquarters parking lot to decide if some big announcement is coming out or not. Now, Amy, you or I could go do that, right? We could go drive to company HQ and count the cars. But the resources and the scope of what a lot of these investment companies make a lot of money doing is probably well beyond what our grandparents ever could have done. So, I mean, if we were to remove this kind of burden from the market, it would give those with the ability to access this information regularly kind of the same leg up they already have without the fear of enforcement. And to Milton Friedman's famous quote in 2002, right? That would even make the market more efficient, right? You want more insider trading, not
right.
less.
I guess I agree with you in one way, which is that, but then, and you raised offline the point that, well, then everyone should just have to disclose what they're doing, right? Because the SEC is looking at what are you saying you're doing versus what you are doing. So if that is the approach, then I don't disagree, right? But if you've signed agreements where you agree to behave a certain way and you don't,
of course, yeah.
Yeah, right. And so maybe we're getting to a new market where there's not going to be confidential information, right? Like, I don't know, mergers and acquisitions, right? How are companies going to navigate that space where maybe they have, they won't have secret project codes. Like, I wish I remembered from my insider trading case what for the M&A one, because I always have the most ridiculous.
Yeah.
Like
Project Starship or whatever. And you're
like, Moose Jaw, like you're like, who gets this job? I want the job of naming like the M&A projects. That'll be my retirement job.
Company now has a Moose Jaw project. Who knows?
Yeah, exactly. So I mean, I think it just has to be all or nothing is the way I would say it. You can't have people telling the world they're acting one way and then acting another. And so, yeah, in a perfectly efficient economy, I do agree that more knowledge is beneficial. But that's not where we're at now.
Right. One of the things I like to talk about here too, and obviously if you're on a podcast, Amy, you have to say AI at least 3 times, so we'll meet our quota. But I think about, especially in the accounting world, right, where I grew up, where I'm from. Back when I started this out more than 20 years ago, to actually physically, and I say that meaning physically, close the books of a company. For those younger listeners that it used to actually be a book with handwriting in it. It took like 45 days, right, to even know how much revenue you had made in the past year. Then it was, how do we audit that revenue? Then it was, let's announce that revenue to the company. And so in the insider trading hypothetical regarding having access to financial reporting data prior to its public announcement, that's a 2-3 month lag between Jan 1 and March 15 or whenever the date is that you're publishing. And there, to me, insider trading is rife with opportunity, and the amount of time you have to actualize on it is a valuable part of the calculus of whether or not it's worth it to do so. We've now moved to most, large accelerated filers are closing and announcing within a month of year end or of their period close. I can see that getting even shorter when we start thinking about things, again, esoterically, like artificial intelligence and auditing and in financial reporting information. So we may get to a point, and this is Chris, I'll put on my, futurist hat and take off my cynic hat, where when the books close at 12/31, midnight on 12/31, we get the answer to what revenue is by 8 a.m. the next day, right? And so there's no time lag between when that information is decided but not available and then is available. So I don't know if that'll solve our insider trading issues or not.
Well, based on the human behavior I've seen, there will be someone who tries in that, point
Yes, yep.
0.00000 second to check at it. Or what I think will be interesting, not necessarily in a good way, is who's hacking who's getting into the closed AI loops as they're doing the books. Or I've also heard of folks using AI to basically plot confounding trades. Mm-hmm. So that, the typical evidence you look for in your trading trading patterns pop won't be there, or you can point to a couple things, right? So it's definitely going to become a new world. I don't know what it will look like, but I think quicker disclosure is better, right?
Yeah, I always go back to the Edgar hacking case of a couple of years ago, where the individuals who were uploading the financial information to be made public were trading on that delay between the upload when their eyes were on the financial information and when it was made public to them, that being mere hours, if not minutes. Yeah, it's going to be different, Amy. I don't know. It'll be wild. So we always want to talk about practical takeaways our listeners and our viewers can have. What's one thing that you've seen in maybe some of those gray area cases where a gatekeeper, right, a CPA or an attorney who's being alleged to have traded or performed some insider trading activity falls on we'll say the good side of the line? What are some of the habits that help you in defending against those allegations?
So the habits would be cleanliness and communications, right? So you know this from your background, Chris, too. You just have to be very disciplined about who you're talking to and about what, right? So even internally, so I would say the good side of the line is even if internally you're at an M&A firm, law firm, and someone asks you a question, or boyfriend asks girlfriend, I'm building these models, you just always have to have this zero trust mindset and be willing to take the hit with boyfriend, girlfriend, significant other, right? The answer has to be absolutely no. And I think the SEC was actually a great training ground for that, which was you don't talk about anything. You don't talk about investigations. My husband is a retired white-collar criminal defense lawyer. We say we've been married almost 30 years because we could never talk about work. You had to talk about something else. You had to actually have a relationship outside of your work discussions, right? Because it would be like, oh, yeah, today was a good day. Today was a bad day. Today, how about them Cubbies, right?
You got it.
So I think cleanliness and communications. And then, if you have legitimate explanation for why something happened in a weird way that doesn't impugn your integrity or, frankly, the intellect of the agents, they're willing to listen, right? Typically, in my experience, insider trading cases are brought not just based on one layer of evidence. There are multiple layers. There may have varying strengths in each of those layers, but there are, I would say, at least 2 or 3 layers of different evidence that all point circumstantially to the behavior at issue. So let's say it's the texts, then it's also what they're doing with the money. Have you ever talked to these people about these topics before this time frame? There are just logical, factual questions which say to a jury, would this make sense or not? But if you're clean in your communications personally or professionally, you eliminate 99.9% of the risk that you're going to get roped into one of these. If it's not on your own behavior, right? Because someone else does something, because you, especially in the civil case, you can be liable too, even if you didn't know or you just weren't taking due care. So that's the main takeaway, I would say.
Yeah, and I think you've hit on it, right? I like to think too. Again, you can kind of follow how Chris does his life, I guess, on a daily basis. I'm trying to find the two goalposts to sit between. One is obviously something much closer to M&A attorney with a duty, knows what he's doing is wrong. Again, in this case, allegedly knows what he's doing is wrong, acts on that matter. And then the other end of that spectrum, I think about, to go back to Nan, my grandmother, like the investment club that she was in. Like they meet regularly, they talk about potential investments of a shared pool of money. It's not a huge dollar amount, obviously, for those retired people in Southeast PA in Lancaster County where she used to live. But it's kind of this idea of like, this is what we do all the time, and we're buying Apple stock because we saw a news report and we think Apple's going to go up. We're not buying out of the money call options a day before a massive announcement that significantly changes the stock price for the first time in the history of trading, right? And you talked a little bit about how folks are using AI to kind of mask those ideas. That's really kind of the classic pattern that we look for in our investigative side, as CPAs, to say, okay, show me all your trades in the past year. Why was this one different? Can we point to a good faith, that piece of paper you find on the street in Manhattan, or a news article, or a hunch that you had that doesn't have an underlying text message talking about rabbis getting surgery 5 minutes before you made the trade, right? That kind of layered approach, I think, that you brought up is a good way to talk about those kind of things.
Absolutely. And the other thing is, unfortunately, most people are willing to, up the ante on themselves, which is, and I've seen each of these scenarios, you take a mortgage out on your home to buy out of the money call options, right? You're a normal hairstylist.
Yep.
No one is ever going to do that unless they know they cannot lose.
Right. Mm-hmm.
So if you up the ante on yourself, that's other great evidence, right? But I think for most people, they're not they're not coming close to the line.
Yeah.
It's really people that we see in our professional spaces where a colleague could put them at risk, right? Mm-hmm. Your best friend in the world who you came up with, and you've worked at this firm together for the last, what I would love, just from a curiosity standpoint, would be to hear what was happening at those firms from Nourafchan, for their fellow associates at all the different law firms when that case came out. Like, oh bleep, where was I?
What did I miss? What am I see now with this hindsight bias that I can?
Right, and there's usually more than a few people on those deal teams, right? Like, was I one of the persons who was a blabbermouth in the old-fashioned parlance?
I like it. Well, Amy, before we wrap, there's obviously a hot new area of insider trading that everyone's talking about. I'd love your 90-second take on prediction markets generally. These are the platforms by which you can bet on, and this again is debate. This is not legal accounting advice or in any way, but you can bet on the result of sports programs or games. You can decide if Chris Ekimoff is going to say snozberries on a podcast, and you can bet on that, right? There's all these different event-based ideas. Yep, write that down. That might show up later. I can't wait to get a call about snozberry bets on Polymarket. But there are these new avenues of, we'll call it trading, insider trading, even though I don't think any of those words really apply to this. What's your take on prediction markets? Do you see it being very similar to what we've talked about? Do you see it being wholly different? Where do you think it's going to go?
Like you said, no legal advice here, right? Because who knows? But I do see some similarities in that I mean, sports, right?
Sports
Snosberry.
gambling has existed since
Yeah,
sports have existed, right? I'm sure since back
exactly.
to the Stone Age.
Exactly. But I think what we're starting to see from like Jay Clayton's statements as the head of SDNY, the comment period the SEC is just asked about for things. What will come are going to be guardrails around corporate information, right? If they're trying to not just again go to the Milton Friedman model, and then that will be insider trading, right? If it's anybody can bet about anything. I mean, they're already right going to limit like betting on war, right? Social ills, those kinds of things. So I think it's just regulation catching up, but the market will decide if regulation is necessary or not. And if not, then again, that's information everybody factors in, right? If it goes to the full Monty, you can do whatever the heck you want, but everyone knows that, then that's a different model, and then people will act accordingly, right?
It's a pretty measured view, Amy. I'm excited to come back to you and see after this. There's a great article if you read the Washington Post, kind of the comedic author Rick Riley talking about recent issues on the golf course where folks are betting that someone will have a certain golf score, and then because you can stand 6 feet away from that person while they're putting, impact the chance that they're going to have that golf score. It's a pretty interesting read. So if you're interested in prediction markets and where that might go down the road, I'd encourage you to think about that and watch a lot of the things Amy just brought up, because we're in the infancy stage here, and there's a lot of growing ideas, and we may even have an upcoming Immaterial podcast episode speaking with someone who operates in that field. So
Fascinating
for the folks out there. But Amy, thank you so much for your time today. Again, I'm joined by Amy Stahl Cotter of Hyman Cotter. We'll have links to your bio, your background, your experience in the show notes. Any parting words for our listeners and viewers out there, Amy?
No, just thanks a lot. I guess, at one point you had asked what are my takeaways if someone finds himself, with a knock on the door.
Yeah.
And I will steal the Dog Whisperers. I don't know if you know the dog, Caeser Milan.
Caeser Milan. I used to watch it with my dog every
Yes.
Saturday morning. So yeah.
No talk, no touch, no eye contact. Turn around, call a lawyer. Do not touch your emails.
You, Mr.
Right.
Mr. Milan, but it's great life.
No, but I love Caeser Milan. He is a hero, right? No talk, no touch, no eye contact with anyone in your twigs. Turn around and call a lawyer.
That'll really resonate with a lot of our dog-owning listeners.
Yeah.
Out there. I mean, I appreciate it. Well, thank you for joining us today, Amy. We appreciate it.
Thank you so much. I appreciate it.
As always, we promise that although the Immaterial Podcast isn't yet authoritative, it will always be authentic. We'll see you next time. Thanks for tuning in.